Welcome to the live trading clinic. My name's Steve Ruffley. We're going to focus on the Bank of England today. So, as I predicted, over the many years I've been presenting, finally we have it. We left off in the US. So, for me, got it wrong. Got it wrong on the pound. To be honest, I've said I didn't really kind of think I knew of any reasons why the pound had pushed as low as it has, but it has. I guess there are a number of reasons for this, and when you kind of take a step back and you're cynical as I'm in the markets, I guess if everybody knows what I know, then they tend to do the opposite before it goes in your favour. So my kind of thinking is that the UK has followed the US in many things, in history, economical terms, are no different. So now the Fed are talking about, an increase in rates. They've brought that rate in. There's different kind of, views out there of how quick the rate's going to be normalised in the US, but they're going up. It's as simple as that. So I can't see a scenario where Mark Carney can't. It can't wriggle out of. It can't not raise rates at some time in the UK. And, again, many times, we've said first, second quarter of 2016, we said that kind of midpoint last year. And then a lot of banks say maybe 2016. Doesn't really matter. When you get, past certain amounts of time, the odds are against you. And it's just a simple matter of time now. It's not really what Mark Carney wants or what he can do. It's just time. When the US are putting interest rates up, the UK have to follow suit at some point. All this kind of nonsense that the UK's not created a housing bubble, it's not a recovery fueled by debt. Of course it is. Nonsense. Of course it's fueled by debt. What idiot? I mean, what do these people think we're idiots? I mean, you look at it, all the kind of, clever little mummies and daddies out there that bought houses in London, houses prices keep going up, all fueled by, again, another ridiculous kind of expectation on what property is really worth and valued. And, let's face it, it is, backed by debt. There's a massive increase in, these kind of unsecured loans, payday loans, all that kind of, nonsense. It's always the poorest of people. So interest rates are not going to affect the rich. They're going to benefit the rich because rich people take their money out of the money they made in stock markets by, taking money out of the bank, putting it in the stock markets, getting a return, put it back in the bank because they get guaranteed income. It's only the poor people that are going to be affected. And let's face it, there's a lot more poor people than there are rich people. Okay, the rich people might have more money, but it's the poor people that are going to suffer for interest rate hikes. But it's inevitable. Okay, so anybody who's bought a house in the last 10 years, very good. Clap their hands, all doing well because they got some money. Especially they bought in London. Some kind of return on their capital investment, but servicing their debt is going to become a lot more difficult. And I can only go off personal experience and people I know. People absolutely mortgaged up to the hilt and, paying for stuff with credit cards. So any kind of increase in, the base rate is going to affect people dramatically. It is dramatically, and it's ordinary people, people with good salaries. But if you've got a £450,000 mortgage and 10 grand on a credit card, every 0.25%, not going to be good for you, is it? Anyway, so not all doom and gloom. Yeah, it is doom and gloom, actually. Yeah, the world's what we've created. But I think for me, the whole point about this Bank of England today being very important is we're not expecting to see a rate today. But I think, Mark Carney is a perfect fall guy. He was brought into the Bank of England as the first foreigner, ever, to be the head of the Bank of England. And he's going to be the fall guy. He's going to put rates up. Everything's going to end badly. He's going to go back to Canada. Goodbye, Mark. But you've done your job. Well done. He's the perfect fall guy for me. So there's no good outcome to rates going up. But, I think realistically, it's more about, thinking about this asset purchase. It's thinking about, the vote. Again, we've been very unanimous for the rate to be unchanged. And, that will change. As I've said to you, as we've looked, finally the US have put rates up. And, again, we've waited for nearly 7 years to hear that, rate hike. But it was massively priced in. And that's going to change the landscape now. We're no longer going to focus on necessarily the consumer kind of, consumer kind of, confidence type things and the job creation. We're going to focus more on the inflation, CPI and PPI side. Okay? So, again, before I start anyway, guys, the risk warning. Remember that spread betting and CFD trading carry high risk or capital. Resulting losses of decision is deposit. The member suit for everyone, so please ensure you fully understand the risks involved. The information comes provided here under no circumstances or an offer solicitation to invest. Nothing in should be construed investment advice. The information provided is believed to be accurate the date it is produced. Education only. The content of the webinar is personal opinion of the moderator and insurance.com. The content is not constitute financial investment or tax advice. Insurance.com is not to liability to the content consumed during this session. All right. Okay. Yeah, sorry about that, guys. Okay, so the webinar is going to cover live charting analysis, multiple time frame trading, fundamental analysis, live money trades, and any kind of questions and answers. So let's look at the markets. What's happening? DAX, oh, it was a really good level in the DAX here, just for a little bounce. We've seen a sell-off. I mean, we can't deny we've seen a sell-off. I guess some of these things related to China, the worries in China. I think, for me personally, I've called it. I've told you what was going to happen when the US put interest rates up. It's a signal to the rest of the civilized world. The interest rates are going to go up across the board with people who've got any money. So risky investments. And let's face it, stocks are risky investments. People seem to have forgot that stocks are a very risky investment and pile the cash in because the good little IFAs and the people with the kind of money out there have seen nothing but stocks rally. But what goes up will come down. Simple as that, isn't it? And we're seeing that towards the tops of the markets are what we're not seeing is the dip buying, and that's again what kind of really signals to me that we're going to see a bit of a sell-off. And all you have to do is look at the the kind of higher time frames and see these monthly. So we've got big levels in the DAX, so 9,312. Every time we've hit these big levels in the past, we've seen these big kind of spike throughs. So this will really signal to me if we're going to actually end up in this kind of grey area down here. And let's face it, anywhere between 5,000 and 7,600 in the DAX is pretty good value, I would still say. So naturally, there's no reason why the DAX should be up these high levels. And think about the VW scandal, the migrant crisis. Germany's posted a massive, deficit, but massive in no terms. We talk about the US having trillions of dollars of debt. The Germany posting 12 billion euros. Positive. It isn't out. It's nothing. It's inconsequential. They're basically funding the entire EU. So what's that 12 billion going to do? It's going to do nothing. So again, this will be a signal for me if we break these bottoms on the higher charts that that we could quickly get down to these levels. And as I've said in history, you look at the past to predict the future. Every time we've rejected, significant bottoms, we've gone higher. So, the DAX has got a real point to prove here. If it doesn't bounce off, this kind of 9,331 area and go back up, then it's going to break. And then, we've got these big distinct levels, down below 8,3. By kind of midpoint this year, second quarter, we could be looking at the DAX trading at 7.5, and people say, no, that can't happen. It's nonsense. It'll get bought back up. Well, if you take the kind of supply and demand out of the market, the supply is going to be there, but if you take the demand away, and you give people an option to put money in, kind of bank accounts and be safe, people will do it. It's as simple as that. So, I think it's not all doom and gloom yet. It's not over, for the stock markets, but it's because I trade, such very small timescales. My average trade, as I've told you, is kind of like 20 minutes long. It's very difficult for me to kind of hold anything for any long period of time. But if you're short the DAX from anywhere up here, then it doesn't really matter, does it? You're not getting out till it tests these lows. So again, the market has to go lower and find some buyers. So it's going to go lower no matter what happens. It's not going to bounce from this point, is it? It's going to have to figure out where it's been in the past. Yeah, and then bounce off it in the future. So nothing can be done, to be honest. The DAX and all the indices are going to continue to sell off because we need to attract the buyers in. And there's nothing to give buyers any confidence, is there? Nothing. It's not, the QE's gone out of the US. The QE's going to be tapered in the UK. And, no matter what Mario Draghi says from the EU, who cares? I mean, who cares what Mario Draghi says? Quantitative Infinity doesn't have the same kind of kudos in the EU that it does in the US. So for me, very difficult to see what's going to make these markets bounce. And again, it's only going to be a cycle of tightening. And people are greedy. People don't care. Look at the situation in China. I mean, you got a lot of people, in China. They've still made money out of the markets going up, but again, are getting out, for anything they can and scrabbling. And no matter what the kind of China does to intervene, it's not working. And that just goes to show you can't play in a market economy. If you want to, be a market economy that's actually, shrouded by, communist society and being told what to do, don't work, okay? Because people vote with the money at the feet. You can't tell people what to do, and China didn't get that, has never got that, and that's why it's failing. Okay, so I'm not having a go at Chinese people because somebody wrote in before. I'm not racist. I don't care. Okay, I literally don't care about anything or anyone. I'm talking about economic terms. I'm talking about economies. People don't even, enter my equation. Okay, I'm talking about economies, right? So China has run its economy very efficiently. Big pat on the back for China. What it didn't realize is that it gets to a certain point where you can't, dictate, human will and free will. Okay, that will always outlive any kind of great ideas. So China's coming unraveled, before our very eyes. And is it stopped? Is it going to stop? No, no time soon. Because once you've opened that can of worms, nothing's going to change. Okay, so that's the whole problem with emerging markets. Okay, they're emerging. So go and stick your money in India for the next couple of years because that's the next big place to be. But let's face it, the guys with the biggest guns and most money are always going to win. Who's that? The UK and America. Simple. Okay, so think about that. Yeah, keep buying the dollar as I've told you. Keep selling the euro. Pretty simple stuff. So on the hourlies on the DAX, again, we're looking to take out these lows here, and yeah, I mean, don't get me wrong, I still think there's some good, dip buying opportunities, but for me, now we're well below that 10,000 level. I don't think intraday we're probably going to see that anytime soon. The industrial data at the Eurozone this week's been poor. The positive payroll didn't really do anything to the markets. So, don't know. We've got initial jobless today. Maybe that could be the last opportunity to see some positive numbers and push the DAX back up. But I've got a sneaking feeling now that we're in this selling kind of mentality, and for me, it's looking, it's break or bounce, isn't it? The bob levels I talk about, bounce levels aren't going to apply, I don't think. So our first major test will be this level down here at 9320, as I said. If we don't bounce off that, then we break through, then we're looking for below, 9,890. So again, see how these levels react. If we don't bounce, then we're going to break, and we're seeing trending markets. SMI. Always a good one to keep your eye on because, a traditional kind of safe haven for the Swiss franc. So, again, it looks a little bit negative for me. FTSE didn't want to stay around 7,000. It's basically, I was buying and selling the 6,000 level yesterday, and, it proved nice for a scalp, but we haven't, find any kind of real momentum to stay above it. So, I said in the Reuters poll that I did in December that by midpoint we'll be about 5,500 of this year, sorry. And it could be even sooner than we think. So. Yeah, a lot of kind of investors getting kind of nervous out there, and the kind of your bog standard teachers with the the 10-year portfolios scratching the head. But as I say, it's just a natural correction. What goes up will come down. Euro was selling overnight. We've seen a nice bounce off of this level down here. But again, I've always said they sell the highs in the euro, and again, lots of value down here. But I mean, we've seen that 9 months of selling. All these wicks here. So unless we get above 660, we're not really going to see any buyers, significant long-term buyers coming in to push the euro up. So again, I mean, a little bit of consolidation towards the bottom, but again, down, up, fake out, a lot of sideways movement. So I think really kind of let's see what happens around about 109.30. But really, I'm still expecting the euro to continue down because negative deposit rate, interest rates are going to go up in the UK and US much quicker than they are in the Eurozone. So who's going to buy the euro? Simple as that, really. Again, it's back to that demand. So dailies, again, little bounces, and we've seen this big kind of move upwards after the kind of Fed and this kind of stuff. But realistically, for me, again, on the dailies, you could expect a guess to make a new high. It looks very much like a flag type formation, doesn't it? If you're going back to your very basic charting, patterns, you could easily say that this is a kind of a flag scenario here. Where you've got the kind of the flagpole here in the market, so we could quickly break out. But again, I don't see who'd be buying the euro long term to keep it at these upper levels. So I'd expect, if we close back inside and below, kind of below 1,100, then 1,000, whatever you want to call it, but really we should be moving back down to these lower levels. Pound, yeah, again, as I said, I don't think I've got it wrong, but I said I didn't really know what was going to happen to make it break this 14223 level, but it looks like it might do. Maybe, again, this is because it's the quiet before the storm. We all know that the US is going to have to continue its hiking cycle, which will filter through to the UK, and it's not going to go up. Interest rates won't go up in the Eurozone before they go up in the UK. So maybe people that we're selling into this kind of down move, continue to push it lower, and then buy lows if we break kind of 137,430. But Yeah, I guess wrong. Yeah, wrong in every sense of the word. You know, I was expecting, well, I'm not wrong yet because that's a time thing. I'm still expecting the pound to get back to 164 because, again, I don't really see what's going to keep these low levels. Interest rates will go up this year. I have to go down to the Bank of England and do it myself. So, they're going to go up at some point. So demand for the pound will come back in. But I think we're just seeing this kind of sell off because it might be later than people think. And I think really this is the kind of big institutions, central banks getting involved and making their money now and buying the pound as low as they can because we're going to be easily back up here by the end of the year. And if we're not, then I don't understand trading anymore, to be honest. I don't understand what value is. I'm not often wrong. As I say, for me, my biggest kind of philosophy in trading is not about being right, being right at the right time, isn't it? So, again, we have to bear that in mind. I'm not looking to position trading. I'm looking for scalp. So I'll still be happy buying, short-term dips in the pound. That's for sure. Dollar yen coming away from the highs. I think again, we look at the monthly chart. We've still got this gap in play. We've still got bags of value until we test, 116.069 and potentially fill this void here. We've still got more buyers than sellers in the dollar. Again, the US have done what they said. They put interest rates up, so that's what people try to jump in, don't they? And buy what they know, and then the market sells what they know. So again, I'll still be looking to dip buying the pound because no great news coming out of Japan, no great news coming out of that side of the world, full stop. So the dollar's still king for me on that one. Got a couple of questions. Let me just say, hi Steve, you tend to favour shorter timescales trading. Can one big trade account like this, or does a big account require longer term trades in order to avoid slippage and big lot size? Well, I trade £250,000, sterling, so I can do it. Yes, you can't trade for seconds. You have to let it a little bit. Give it a little bit of time to breathe. But I mean, yeah, if I can do it, anyone can do it. Isn't the yen a safe haven? A safe haven for what? I don't understand. The Swiss is a safe haven. The yen's not a safe haven. No. I mean, depends what you class as safe haven, doesn't it? No, the yen's not a safe haven in my opinion. But people have different opinions. At the end of the day, no good news out of Japan. An aging population in a situation where they're not, literally breeding enough people to supply that aging population. So if you're talking about a safe haven, you're only talking about a safe haven for, central banks or, investment houses or, big institutions. You're not talking a safe haven for any normal person. I mean, yes, Miriam. The 1 hour is what I use to view the markets, but no, I mean, I use a combination of time frames. I'm playing around with different things. I mean, this is what I'm kind of looking at the minute. I'm always kind of, looking for new opportunities, looking for different things. This is a minute line chart, versus an hour chart on the DAX. So I will use, sometimes the lower time frames for entry. I don't ever really use the minute for entry. Generally, it's the 5 minute I'll use. But I mean, again, I'm constantly changing these things and looking around. I mean, I find it very difficult to trade at the minute, to be honest, because I trade such large size. The swings and the pain I have to endure are massive. I mean, I clip a minimum of £50 a point, £30 a point. I take positions of £1,000 a point. It's big money. So you can't really. As Manjo said, you can't really just be in it for a second. You have to be in it for at least, maybe 5, 10, 15, 20 minutes, which is a huge amount of time in trading, huge amount of time. But, it is what it is. You've got to get involved in the markets. You have to trade the way you know how. And, there's still money to be made, but it's very difficult. I mean, I took a position in oil yesterday and got out just before it basically collapsed. I was £350 a point. Short oil, got out for a relative, basically a scratch, and then it dropped 100 points in the space of an hour and a half. So there is the opportunity to make big money, but there's also the opportunity to lose big money. I've been 30, 40, 50,000 pounds offside in trades, and I'm talking intradays. So when you scale up your size, it's very difficult. So I'm not talking to you guys about education that's theoretical. I'm not telling you about kind of little boy trades. I'm the real deal. I am the real deal. I trade more money live than anybody else on the internet. Anybody else. Okay, certainly anybody on FX Street, I'm the biggest trader by far, and I'm a real trader. I trade every single day. That's how I make my money. I do these things because Nah, why not? It's a bit of fun, isn't it? I like the sound of my own voice sometimes, and I know what I'm talking about. So why not give you guys, some free education? It keeps me sharp. It keeps me motivated. So we've got a couple of questions. Yeah, 10 minutes for the Bank of England. I think the Bank of England were expecting no change. I think it's more the rhetoric I'm listening out for. If there is kind of any change in that, the kind of the vote to be unchanged. We're kind of unanimous 8-8. There was only one person voting for a hike last time, so it's what's coming out. I mean, it doesn't matter what it says. I've got my own opinions, and that's how I trade. Mark Carney's basically been backed into a corner, and he's going to have to move this year. And he doesn't want to frighten the market, spook the market, but I'm always reading between the lines. So I'm looking for any change in asset purchase facility. I don't think that'll be changed this month. But it's coming. The interest rate hike is coming, and it's these little comments. It's these changes in who says what, and the kind of people that vote with these things, and you can't run away from it. Mark Carney, the Bank of England, they're not stupid, no matter what anyone thinks, and the interest rate hike is certainly coming. It's just that it's not a matter of in if it's when, and it'll be slow, it'll be gradual, blah 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 blah. But like I said, a lot of people have said to me over the years, "What are you so worried about, Steve? It's only a quarter percentage point, hike. That's not going to affect anybody." Yeah, it's going to affect a lot of people. And once it goes up, it ain't going to come down, and it ain't going to come down for another 10 years. Trust me on that. So yeah, historically, interest rate hikes are, a bad thing for the economy. I think, the US markets are taking it pretty well because they've been well versed in what's going to happen. But in the UK, different kettle of fish, different story. Everyone's so busy, and greedy, being, a wannabe landlord and buying second properties and, thinking that house prices can only go up. That's all you know. That's all people know. I mean, people only go for what's happened in history. But, as we've seen with the oil prices, as we've seen with gold, as we've seen with stock markets, what go up will come down. Okay? I keep saying these things. If you treat property like an investment, it will behave like an investment. And we're taking all the buyers out of the markets because we can't let the kids buy anything because they haven't got any money. The old duffer's going to die soon, as we all know. And again, myself, I'm going to inherit 10 houses. What am I going to do with 10 houses? Got my own money. Going to buy a load of Ferraris. So I'm not the only person in the world that's in this scenario, I'm afraid. So yes, 7 minutes now before the Bank of England. So I'll keep an eye on the asset purchase facility. That's the only thing I really think we could foresee any potential shock in. But it's any comments today, about the potential to seeing that rate dealt with, that rate hike dealt with, because it's inevitable. It's absolutely inevitable. Nothing more sure in my mind. So certainly keep an eye on the pound. Again, towards low levels here. So any indication that a rate hike could be sooner than people think, or is on the cards, could see definitely the pound get up to that 50% fib level here. Around about 144.525. Euro again still high for me, but I'm not selling just yet until we break the highs and maybe test that 100 mark. But I'll be selling bundles up there. No interest in the dollar yen on that one. S&P, no interest. DAX, no interest. Gold, no interest in gold. UK, maybe. Maybe if we see, a rate hike, less likely we'll see the FTSE go up. But my scenario is really I can only see the pound gain strength and the FTSE weaken. So that's what I'll be looking for. So any final questions? What is the best value live squawk in your opinion? Well, you've answered your own question though. It is live squawk. That's the best value in my opinion. If you open an account with InterTrader, you get live squawk for free. So that's what I use. That's what I'm listening to in the background. So that's the best value for me. A guy called Harry Daniels, nice chap, knows his stuff. Big fan. Yeah, I mean, I do talk fast, guys, because that's the markets. I'm sorry if English isn't your first language, but you've got to kind of get your point across. You've got to talk about these things. I'm passionate about what I talk about, so there's a lot to kind of fit in these very very small sessions. So yeah, apologies if I speak fast. It's something I've always done, and as I say, all these things are free, so you ain't paying me anything. So what can we do? What can we do? So 4 minutes now for the Bank of England. As I say, I'm expecting, like everybody else is, completely unchanged. But it's if you watch the FOMC minutes and from the Fed, it's not the actual kind of figure that has moved the markets. It's the speculation. That's what's really driving the markets right now because no matter who you speak to, there's nobody out there that knows exactly what's going to happen. And if I don't know what's going on and what's going to happen, then very few people do. And you listen to George Soros, you can listen to Warren Buffett, old duffers, that live in a different time, in a different generation. But the people that are making the money right now, which I'm one of them, the people that go off their own opinions and try and figure out what's happening in the world, unbiased. So as I say, I trade the money, I make the money. I'm not just telling you education and my opinions for the fun of it. I'm telling you it because these are things I use to base my calls on. And the markets are difficult, and I sympathise with people with small accounts, and I sympathise for anybody who's trading their own money because it is hard. But the money is out there. You just have to approach the markets in the right way. So, not really a great deal happening before this announcement. Again, seeing a little bit of an uptick in the pound, and for me, that can only be the smart move. That no matter what the Bank of England say, we know a rate hike is coming. So after these big sustained sell-offs we've seen, then there has to be a little bit of profit taking or dip buying or some value down there. There has to be. So again, keep an eye on that pound. Euro dollar. Yeah, it's not going to be affected by this figure, I don't think. But again, it is towards the highs intraday for me. So anything that kind of draws attention to the pound potentially could see some basket traders taking some of the highs out of the euro. Don't know, difficult call that one. All right, guys, just 2 minutes now before the figure. So we're looking for the asset purchase facility. 375 billion is expected. Interest rates remain unchanged at 0.5. Keep an eye on the people that vote for a cut. There should be none. Keep an eye on the people that vote for a hike. It was 1 last time, and the unchanged was 8 of 8. All right, guys, so just a couple of minutes now. So as I said, I'll be looking out first and foremost for the asset purchase facility because that's the only thing we could potentially see a little bit of wiggle room on. We're all expecting unchanged at 0.5, but then keep an eye on this. This vote for a hike. If that is 2, 3 people, again can certainly send ripples through the markets. So again, that pound's creeping up. At 143,899 at the minute. 1 minute for the figure now, guys. So as I say, 375 billion for asset purchase facility. That's what we're looking out for. 0.5 unchanged. 8 of 8 for the unchanged, and 1 last time was voting for a hike. So any change in that could be interesting. Pounds just chipping away from the highs. 10 seconds. On hold, asset purchase facility the same. 1 voting for a hike, 8 people voting for unchanged. So a bit of a spike up in the pound though. Okay, some comments coming through. I'm listening to. I'll forward any comments in a second. Okay, just bought some pound there. I think it's going to probably try and test these tops here because really, all these comments are coming through is that, rate hike is on the cards. It's going to be gradual, but it's coming. It's coming. It's around the corner. So like I said, I couldn't really see anything, but strength coming to the pound from that. didn't get particularly good fill though, to be honest. But so yeah, no movement in the rest of the markets, to be honest. The FTSE did nothing, but I mean that pound really, yeah, a lot of bizarre movement in the pound though, to be honest. I mean, look at the kind of 5-minute charts. You know, we saw this kind of big spike up, and you know these 144, 215 levels are good, but I mean it's just sorry, this 5-minute spikes. You look at the minutes. You know, I mean, you know, you could even, I guess, do a mini Fibonacci from the low to the high. You know, so I think maybe we're going to test back down to 143,955, and then maybe a bounce up. I mean, that's the positivities come from, you know, basically unchanged in everything means that, you know, something will happen, and it can only go to the upside. So back to that 50% there, just quickly touched it, broke through. So I'd say it's probably, you know, a nice indication of what we're going to do now. If we hold above that, then we should make a new high and probably, you know, break 1.44155 and continue, you know, this initial uptrend. Very jumpy though, very jumpy, very very jumpy getting your fills. And as I say, you know, I was in that trade for how long was in that trade for? About 41 seconds. You know, just in and out. But it's just so difficult. I mean, you can't really kind of trade that with any kind of major confidence because, you know, if you've lumped in £200-400 a point up here, you know, you're sweating. You know, you don't want to be kind of seeing the market, you know, break that 50%, hold it below it, and then go up. So we're right on that 50% now, right on that 50%. So, you know, basically we're going to either retrace the entire move or go and make a new high. So it looks like we're potentially going to retrace the entire move. Interesting. But I mean, again, that's trading something technically which is purely fundamentally driven, isn't it? And it's you know, that's not. Yeah, one of the disadvantages, unfortunately, of having a home office is having a dog and people knocking at the door. Yeah, not ideal. So it looks like we're probably going to hit these bottoms now. Then a 143,785. So, yeah, interesting. Well, I mean, I guess the rest of the markets haven't done anything, to be honest. You know, the euro's basically not been moved. Dollar won't function anyway, and you know the FTSE again taking a slight bid, but that's bouncing off the bottoms, as is the DAX, as is the S&P. Well, there we go, guys. I mean, again, if you look at the hourly, you know that spike in the pound is, you know, it's you know not completely eroded yet, but it's certainly bounced back down. Maybe that's again another option for the big boys. You know, the big boys, the institutions out there, to know a rate hike is coming, putting the market up very, very quickly. You know, 60, 70 ticks. What did we push up? No, well, not that much really. Kind of, we've probably gone about you know kind of 35, 36 full ticks, but then maybe they'll smash it to make some new lows. And again, what I'm thinking is that if everybody knows what everybody else knows, that a rate hike is inevitable, then what they'll do is they'll push the pound up, they'll sell it back down very, very, very quickly to break these monthly levels that I showed you, and then buy it back up for the long term. So, I mean, it's when the market is quite quiet and thin like this, you know, the Bank of England being completely unchanged and everything is not really kind of ideal for anyone or anything to make any money, is it? So the policy summary was pretty much unchanged, that interest rate hikes are coming. They're going to be slow, they're going to be gradual. We're worried about, you know, personal consumption, but we're worried about, you know, personal debt. But, you know, what's changed in the last 8 years? Nothing. People have borrowed too much, tough. That's the conditions the government have set. But interest rates move in cycles, so they're more likely to go up before they go down. Yeah, I mean, more hawkish than dovish. I mean, again, if you're seeing one person voting for a hike, then that means potentially the hike is going to come quicker, which again should send the pound up. But it doesn't really matter, you know, because you know we haven't seen a change. So the underlying immediate situation is that nothing has changed. So the speculation that's gone into the pound just then is an immediate knee-jerk reaction. It's thinking what's going to happen over the next 5 minutes, 15 minutes, hour, day, or week. Okay, if one person's voted for a hike, then you know it's it's only one person. It hasn't actually happened. So again, it's the speculation that's going to be driving the market over the next kind of few hours. We've seen the knee-jerk 5-minute reaction, which is market's gone up, market's gone down. So it's going to do one or two things, isn't it? It's going to carry on the trend, overall trend, and go down, or because of these comments and because of the outlook, it's going to bounce back up. For me, like I said, I bought it. I was in, and I was out very, very quickly. And again, I mean, it's gaining a little bit of strength now. So I still think, for me, that it's new highs. I think it's inevitable that the pound has to go up, and it's inevitable that interest rates in the UK have to go up, and that's what I've kept saying to you. I haven't changed my outlook. It's anything that comes out of the Bank of England, whether you like it or not, is just the ever decreasing circles of when they're going to press the button. It's not if, it's when. So I wouldn't be surprised if we hit 144.220. Maybe get as high as 144.05. And I might have a little sell up there, to be honest. Again, like I said, I'm in the markets, I'm out in the markets. I'm not looking for position trades here. So yeah, a bit cheeky, really. Again, we saw that initial spike, then the market, didn't make the new lows. So it doesn't make a new low, it has to, make new highs. But really, only if it holds above this 50%. So it hasn't really done it in the way I'd like. So I wouldn't have the most confidence in the world of this technical, Fibonacci playing out. But I would say we're pretty much a shoo-in for a new high here, because we haven't made a new low. So it's as simple as that. For me, hawkish, dovish, didn't really change my opinion that interest rates go up this year. So pound's low, so buy the pound. It's it's not difficult. So, I mean, these highs are just a few ticks away here. So we can see a quick spike. These highs are a definite target, and maybe back to this 50% up here. So we could easily see, another 11, to 32 ticks on the upside. So new high. Ooh, here it comes. Ooh, there we go. New high. So next target is 144.220. I think it might be there for long. It might quickly jump back down. Again, we're talking about scalpers being involved here. Do we see any chance of trend reversal in the euro pound? I never look at the euro pound, to be honest, but I can do. I can have a look now. Well, I don't know, really. I mean, you've got a big target, really, here, haven't you? At 0.76636. For the down move, can get back to the 50% retracement. So, no, really. I mean, I wouldn't be buying the euro, as I've told you. I wouldn't be buying the euro against any major pair. So, no, I mean, after this, there's lots of green. I'd be a massive seller if I ever traded this, at these higher levels at 0.76636. I would not be buying the euro against the pound. No way at all. So no, I don't. I mean, I think we're going to see this kind of scenario where the euro eventually gets battered. Obviously, it's not being helped by the pound, selling off against the dollar. But I mean, I think for me that's more institutional type stuff. I don't think that this trend's going to continue on the downside. Yeah, I mean, I guess it's one of these difficult things, isn't it? It's if you're following and you're trading something for a long time, you're looking for them big sweeping trends. I don't trade that way. I'm in, I'm out. I'm in. For small parts of any big move. I'm not looking for, a big trend reversal. So it's difficult for me to kind of, get inside your head. I'm looking to make money. So, a big trend reversal for me can be an hour. It can be 2 hours. But I would say that, here we go. I mean, the pounds, these highs, we're looking to take these highs out here. So I'll be probably, even though I'm a buyer of the pound, I'll still sell a quick scalp if we get to this position up here pretty quickly. As I say, I'm not trying to be right. I just want to, make money, and I'm doing it with the kind of least pain that I can. So indices across the board, a little bit green. Gold, really kind of, struggling with these 100 mark. I think once we get back below 180, we're just going to plummet towards $1,000, as I've always said. And the euro is selling any major highs. We might test 100 before we get down. And again, I can only see strength in the dollar, to be honest. So a little tiny trade there, nothing major. It's just probably a bottle of 2002 Dom Perignon. So not bad for a few seconds work, but it's not going to change anyone's lives. Anything else, guys, finally, before we'll wrap it up? Well, I don't know, Milan. I mean, I make money, so if I can make money, anyone can make money. I trade a spread betting platform, Intertrader, who the chief market strategist for, and some of my spreads are 5 pips. You know what you got to do? Got to do, more size, bigger balls, more aggressive. That's how you make money. Yeah, well, listen, good luck to you guys. As I say, the pound strengthened as I thought it was inevitable. I can only see the pound really. I think maybe we test new lows actually. Longer term before we retrace. But I'm definitely going for 164 in the pound by the end of the year. And if it's not that, then I don't understand the world. It's not a world I want to live in. The pound's going to find some value at some point because rates are going to go up. As I say, it's where do you put your money if you're invested in 1% or you're part of the global economy. It's not in the eurozone because interest rates aren't going up anytime soon, and the US has started the hiking cycle, and the UK will follow. I don't think Carney's got the manoeuvrability to leave it till the end of 2016, and it doesn't really matter anyway. I mean, people of this generation are buying 35-year mortgages, so interest rates are going up. So just that level here, these new highs can be broken. So if you see a quick shift up, as I said, to this 50% here, I'd have a quick sell as a bit of a scalp. But these tops look in danger now of breaking. So, yeah, it would have been a very nice trade if we left it, but to be honest, as I say, that kind of 45 seconds in and out, that's more my style. I'm not really kind of looking for... anything longer term, but it's easy. Everything's easy in hindsight, isn't it? I still made money. I made more money, just than most people in a day, but there we go. I'm not here to brag, am I? All right, guys, listen, anything else, get me on Twitter, at Steve Ruffley. You can buy the book if nobody's bought the book yet. The Rough Guide to Trading's out there. A lot of good reviews on Amazon. It's a good book. It took me a very long time to write, and I make £1.60 a copy, so don't worry about me trying to flog it and trying to make sales because I don't care. I don't care. I really don't care. So there's the link if you want to buy the book. It's also on the FX Street books list. I was 4 out of 10 for the most viewed content of books in 2015, which is not bad because I only published it in September, so it must be good. If you have bought it, do leave me a review. That'd be nice of you. I don't really ask much of you guys. Like I said, look for that pound. Look for it to get to the 50 level. I have a little cheeky sell there. But really for me, it's status quo. Indices down. Pound, again, longer term, I think we might go down before we go up. But 164 is my call by the end of the year for sure. And selling behind the euro because it's going nowhere. All right, guys, anything else, give me a shout on Twitter. And it's been my pleasure. All right, guys, thank you very much.